made you co-host.
Thank you, Maria. Thank you so much. Thank you for having me. Good morning, everyone. Good afternoon, rather, excuse me. Thank you for the introduction as well, Marianne. By the way, congratulations on the collaboration with Vidrio. Great news that I recently heard. So I'm just going to turn over to the presentation. Give me one moment. I'm going to share my screen. Okay, here we go. Okay. So the reason this topic came about was I sent Marianne a stat that I saw from StatsCan that I was following. Recent figures that came out, what was happening with marriage versus common law, and how frankly, as you'll see, it's quite apparent, common law replacing the notion of marriage or the institution of marriage as we know it. So I set up the presentation on three fronts. Where is marriage on the ideology scale? We look at some of the lagging indicators, being statistics, of course, past, present, and future through demography, economics, and as you'll see, that's a main driver, a major driver, and the resulting societal shift that all that has occurred. Then the next segment is where are we, why are we here? Societal or contributing factors that place the notion of marriage or the institution of marriage where it is today, and then where are we headed? Marriage versus common law and implications for us as mediators and overall as society. The shift in ideology and changing societal norms came about from, you'll see in the stats, from 1981 to 2021. So StatsCan provided the couples that were common law then versus now. And as you'll see, in 1981, 6% of couples were common law versus about a quarter of couples in 2021. So that's a fourfold or 400% increase in common law. The figures I have in red on the screen, I'll just draw your eyes to them because they're the numbers that complement each other. And they're important so that you'll see the fourfold increase here is met by the fourfold decrease in marriage over down here. Different data sets are complementing each other, meaning that we can rely on them. There's corroboration. So we see the numbers here, and as I'll point out later on as well, I think the number of divorces are being overstated, and I'll tell you why later on. So the crude marriage rate, number of marriages per 1,000 population, as I mentioned, we've got almost 8 in 1981 versus 2.5. So that's roughly a 400% decrease in marriage. The divorce rate that I mentioned earlier being overstated, they count new immigrants and the population growing in the figures. Well, the correct way to have done this, it would be to take the people that were married in 1980, 1990, or 2000 and survey the same data set and see where their divorce rate is based on the same population. By including the new immigrants that come into the country married, we're skewing the real true divorce rate. So what that tells me is StatsCan is more interested in the overall standing, where we are, married versus divorced or single, but they're not necessarily tracking what the trends are accurately, in my view, just because they're including the married couples that have come in recent years versus decades ago. So we can't make a like comparison or relative comparison. So it's most common law has become the norm mostly among young adults in the ages of 20 to 24, very young age group, very young demographic. 2021, 80% in that group were living in common law. So as we know, 3 years or more, they're defined as being common law. I question if I combine the age and the definition of common law, I start to question whether they're truly common law as being committed in a relationship or not, just based on the demographic and the age, but also the financial status. As you'll see later on in the presentation, people tend to hesitate to get married until they're financially secure. So someone normally at 20 years old is still getting established. They're still in university and getting their foothold. So I doubt that they have the notion or idea of marriage or some long-term union in mind, but more like a commitment that's on another level, boyfriend or girlfriend, although they're defined as being common law on paper. That's why I say I question it. So why is the phenomenon of 80% living in common law? Perceived concern over financial future, combining resources. So we know common law is separate to assets or property, except for trust claims. So if I if I have a home and my partner gives me a $20,000 gift for renovation, that person has unjustly enriched me if I don't provide some compensation or return on that investment. So that's a trust claim. And there are 4 types of trust claims. So as mediators, all we need to know is that that sort of fits into the box of a potential trust claim. We can give that as legal information, but we can't step the bounds and give them legal advice. That would be a conversation they'd need to have with a lawyer as to whether their circumstances around the trust claim dictate a true trust claim or not. And then they would come back to mediation. I've worked on several of those, and that's usually what I've done. We just basically stop the mediation. They get advice on where they feel they're entitled, and then we mediate from there forward. So is that feeling of financial insecurity justified? There is security when financial resources are combined inside of a strong relationship. Therefore, does this infer the core issue at hand is really a lowered expectation from a partner to commit to a long-term relationship? If people are doing common law, is it because they feel that marriage is not something that they would that it wouldn't last, that they don't feel there's full trust there was the way there was decades ago when our parents got married? Or is it for financial? And as you'll see, it's more likely along the lines, the realm of financial security. Common law unions are also among the older age group, the 55 to 69 age group. So in 2021, it was 16%. In 2016, it was 13%, up slightly, but certainly in an upward trend. But I will point out that when I looked at some of the old numbers with the older demographic, it always was something that they would consider. If someone on their first marriage got divorced, let's say in their 40s or 50s, and they were the subject of equalization or property division, they're less likely to commit to a long-term relationship again, where they would be subject to halving their assets again, a second or third time. So for that reason, they've always been more open to common law in that demographic, in that age group. So from 1981 to 2021, the number of common law couples increased by about 447%. You notice that's the 4-fold increase we saw earlier. So it's the same on trend with what we've been seeing so far in the stats. Among the G7 countries, Canada had the highest share of couples that are living in common law. But I will point out, based on the stats I reviewed from Stats Canada, it was a skewed average because that's mostly Quebec. They've always been more open to common law relationships than other areas of the country. So that it's an accurate number, but it's a skewed average because it's mainly from one province. At present, marriage remains the predominant type of union. 2021, about 3 out of 4 couples were married, with 1 out of 4 being common law. That's just existing numbers. Obviously, we know that that's being reversed. If I asked last time I did this presentation, I asked how many people know of a common law couple, at least 1 or 2, and almost everyone put up their hand. So it's not a matter of if this trend is continuing, and as it continues, the main type of union or marriage will be common law. There was a Time magazine article that I found since the presentation in May at York, and it was called "Single at 40, Blame the Economy" from Time magazine. And it focused on the differences between male and female perceptions of a long-term relationship. So you have 25% of Americans that have never been married. So 1 out of 4 at 40 haven't been married, where it was 6% in 1980. So you can see, once again, it's about a 4-fold factor, as it was with everything else. That gives me some confidence in using the numbers from the US versus Canada. I could not find the Canadian equivalent, but I used this to extrapolate, and it does seem on the surface to more or less corroborate what we're seeing in Canada, in North America. The underlying factors, some of them, not all of them, are economic, but most of them are, but there are societal as well. There's less stigma around the notion of being unmarried. We've seen a societal acceptance of many types of people, whether it's economic status, whether it's societal status, for example, same-sex marriage, LGBTQ, and so on. So it's a good thing that we're more accepting of people in general, but as a result of that, the traditional fabric of society is degrading. When I say fabric of society, it used to be when you would get to a certain point in life, you went to university, you got a job. The goal was always to be financially secure enough where you would marry, create a family, and create the next generation. that is not that value is not being held to the same strength of core that it was previously. So if we look at the survey of men versus women, the main driver being economic or financial, during the past 30 years, single men's income has dropped, where single women income has either remained the same or risen. I've seen conflicting info on that, so it's not exactly clear, but we know for sure that men's income has dropped over the past 30 years, the average income anyway. The trend has been that as men have lost ground economically or financially, they feel less inclined to be inside of a relationship. Traditionally, men have been the ones to ask or court the partner. And if that being the case, they need to feel confident that they could be the provider as they felt that they would need to be traditionally. So that being the case, that caused a lot of men to withdraw from entering the relationship. And the survey also found that women partners or females in general still look for a financial partner in marriage. Obviously not all, but they certainly consider finances a big part of who they will marry. Coupled with a shift in economic class, the broader economic class being shifted, when you see companies like Uber or any of the big names that would replace small businesses, you see a shift of economic wealth. When Uber came into Toronto or Canada 2012, there were many people in the taxi industry that had built assets and taxi plates and other sources of income from those assets. That all dissipated when an app took over. That's just one example of many, but in many industries, you had a replacement of small business with an app or wealth transferring from many to a few. And that continues. Just a little more continuing of that, 20% of the unmarried 40 to 44 middle-aged men and women are living with a romantic partner, but 4 out of 5 are not living arrangement. And as you'll see, that's not because they don't want to be, but there's apprehension of finances. So it doesn't imply that they don't want to be in a relationship, but it does imply that there's apprehension of whether they'll be subject to some financial implication, whether it's equalization, whether it's some claim being made against them or something. Financial seems to be the underlying driver. So it's underscored by the age group. If a person commits to a perceived financial arrangement during a latter stage in life, as I mentioned before, they feel more risk of not being able to financially recover if the relationship fails at some later point. So imagine someone at 40, even at the early age of 40, they started building their wealth in their early 20s. So they spent nearly or approximately 20 years building their wealth. If they need to start over again at 40, their retirement in their 50s or 60s is questionable to start at a latter age in life. So even at the early age of 40, there's concern over remarrying versus common law. I'm going to show you a series of polls from the year 2000 up to the year 2023. And what's interesting is there's a very clear common theme that it's always the top 2 factors are work and finances. There's a lot of interrelated factors here. When people say work, they're really talking about their money or financial situation. And when they talk about finances, they're also talking about work, vice versa. There's a very high degree of interrelatedness here, as you'll see. So the Ipsos Reid poll in October 2000, just over 20 years ago, as you'll see, the top 2 were work and finances, or basically 2/3 of the concerns that caused them stress were financial related issues. And the children and health issues on the lower scale, you'll see more or less is on par 23 years later. The Financial Planners of Canada also has a stress index, an annual stress index that they take a survey of. They survey about 2,000 people throughout the country. They claim that population is the sampling that they need to extrapolate on the entire population. They've done it for many years, and as you'll see in the next few slides, the numbers again state, if you see the top 2, money and work, and not the exact same proportion. The numbers don't matter as much as the fact that the top 2 concerns are, qualitatively speaking, money and finance, work, and so on. Personal health and relationships comes down the road, but you could argue that your health is somewhat correlated to your finances. If you're stressed, stress causes health concerns, whether it's mental health or other ailments. Stress is a big factor in a lot of things that play in. So 2 in 5, or 39%, report feeling less hopeful about their financial futures in 2022 than in 2021, just 1 year before. 35%, or about a third, say financial stress is leading to anxiety, depression, or mental health. As we saw in the pandemic was a catalyst or an accelerant to what was already there. If there was a relationship that was on a shaky foundation, whether it was financial issues or a relationship, it brought to the surface what was already there. So if couples were not getting along, but they were at work during the day and they spent less time together, they might have been able to manage the relationship. If there was financial issues before and there was a lockdown or less opportunity to earn an income, now it just exaggerated the problem that was already there. So COVID was really just something that was an accelerant, or as they say, a fuel to what was already there. It brought to the surface something that was already there, and it magnified it. You had retail stores that were shut down, so industrial real estate valuations went up dramatically because industrial real estate was a surrogate for retail. You had to buy everything through e-commerce. So industrial warehousing was on very short supply, and frankly still is to this day. So now we are to 2023, 23 years later from the first date, and as you see, top two once again, money and work. The previous year, in 40% in 2023, money was the main concern. It was 38% in 2022. When I see 2-3%, to me, that's within the margin of error. To me, that's the same thing. When I start to see 5 or 6%, then I say there's a slight change. But I don't see a change. It's just on the same level as 1 year to another. I'm just trying to show, the more important thing here is to show a trend or a pattern rather than the numbers themselves. So you can see the top two being the money concerns and work, and then of course personal health and relationships, almost in the same proportion from year over year from 20 years ago, more than 20 years ago. And once again, the point I made before is that I would argue that personal health and relationships are all interrelated to the financials. When something is bothering you to the degree it is, if you feel you have anxiety or unable to sleep, that's going to affect much more than just the root cause of what happened, whether it's money or whatever. If you have concern over paying bills, you're going to be concerned about lots of things, but you're not going to be the same person you were, and perhaps be either more irritable, less easy to get along with, or whatever. But the point is that it affects everything about the relationship you're in. So about half Canadians in this recent survey said that they've lost sleep. Canadians have lost sleep due to financial concerns. The number one factor was bill payments, being able to make bill payments. That is because over the last year and a half now, the Bank of Canada, as we all know, has raised interest rates. So people borrowed and they bought homes, they bought real estate on the premise that they were going to have a 2% mortgage for 5 years. Well, that 2% mortgage on an open term is now 6%. So a threefold increase in the interest rate is something that some people were able to handle, but some were not. What most financial institutions did to hedge against collapse of the real estate market and to help people manage the increase was to extend the payment terms. So most people would, when they buy a house or any type of real estate, set up a mortgage for a 25-year amortization, or a period of which you pay off the loan. So the banks, what they did, they worked with the borrower and they said, we'll increase that 25 years to 40, 50, even 60 or 70 years. At that point, your payment is manageable, but at that point, you're not really building wealth, you're more or less renting. You won't pay off the loan in your lifetime, so you're just renting for the remaining mortgage or your entire life, frankly. So, but the point is that they had the increase in their cost of living had the biggest impact on their stressor, the financial issues. Most people's wealth in our country, and probably most countries, is real estate, whether it's asset owned, equity, or debt. In every country I've looked at stats, it's always the same thing, where most people's wealth, regardless of what economic class they're at, their biggest proportion of wealth comes from their real estate assets. So when that changes, there's going to be problems accompanied with that. You have, by the way, I haven't been pointing out, but at the bottom are the links for the sources of this data if you want. So signs of financial constraints where housing value is highest. So there's obviously a strong correlation in Ontario and BC. I know we're more or less focused on Ontario, but as I'll show you, there is a correlation with other countries and other provinces rather. So in the pandemic, there was quantitative easing. When the economy slows down, what the government does is they make borrowing easier. So they make money cheaper and easier to borrow. When they do that, they're able to spur economic growth when they need to. So that's called quantitative easing. What they've done since March 2nd, 2022, when they began raising interest rates, is now they're doing what's called quantitative tightening. So they're doing the reverse. Instead of making money easy to borrow at cheap rates, they're going the opposite way because they want to contract the economy. The problem was it caused inflationary pressures from 0.25% in March 2nd, 2022 to a 5% policy rate today. That's a many-time increase in the policy rate that's for most people hard to handle. So if it weren't for the financial institutions working with people who manage the payments, we'd have a bigger problem on our hands than otherwise. The banks, to be clear, the banks the financial institutions do not want anyone's house. They want to work with people. But you should know, if you're doing deals that are going forward in the future, right now the bank regulators are putting pressure on the banks to increase their reserves. What that means is they're going to have more money set aside that they can't invest in their business. The banks don't want that. So will they continue to work with borrowers to the extent they have? That's the question that everyone's asking in the world of finance right now. They may be mandated to do it. They may do it voluntarily, but it's uncertain as to what situation will be a year from now when most of the people that got a mortgage for 5 years in 2022 or 3 or 4 or 5 year terms comes up for renewal, and what did you do at that point? Will they have to requalify? Right now, the current rules are that if you are with the same financial institution, you don't have to requalify. If they change that because they want to unload loans that they don't want, then that person will have to sell. So there'll be more supply in the market and a change in value. When there's more supply in the market, it changes the value if demand doesn't change, all else being equal. So we talked about the financial stresses or the pain that some people are going through. People are going to have to be more creative to offset their financial concerns. I talked about this many times, but alternative housing, whether it's laneway housing, right now there's been a removal of exclusionary zoning. In Toronto, you can now build a fourplex. You have to go through a process, of course, but there's a legality now that wasn't there 6 months ago. Each family has privacy with a fourplex. You can, let's say you live in one unit, your parents live in the other, and then you rent out the other two as a mortgage helper. That's an easy way to build wealth instead of buying the house that you occupied entirely. And a settlement or a compromise would be to buy part of a house and rent out the other and build wealth that way. That's nothing new. Just what I see happening is that's going to be more prevalent than previous years. Okay, so generally speaking, the couples in Canada in urban centers are more likely to have kids at home, about half in 2021. It's due in part to the fact that in urban and suburban centers, you need to be close to conveniences that, whether it's universities or otherwise, people with families mostly live in urban and suburban centers. As it points out in the data from StatsCan, in rural areas, the population tends to be of an older age and retirement age. So that's not as much of a factor. But there's a strong correlation I found when I looked at the numbers between housing value and kids living at home. Obviously, if housing value is higher, they can't buy on their own, so they're living at home. And the problem with that is the previous generation, the parents' generation, were able to build wealth. If the economic situation now is not going to improve, then that puts a constraint on the next generation being able to build wealth. They've got their parents to help them now, but when these young people are parents themselves, will they be able to help their kids? That's a big question that's being asked right now. And in Toronto GTA, about 60% of people in Toronto, and the same in Oshawa and Durham region, have children at home. And I pointed that out because that was the highest proportion. Oshawa was one of the highest increasing valuation centers before the values started to go down in 2017-18 for the first time, and then again in 2022. While some valuations have went up, others have went down. In areas where there's precarious employment, you've seen some decreases as well. So within the GTA, having children at home was typical among couples, within other areas as well. Very high proportions in outlying Milton, Brampton, Ajax, Vaughan, all in the west, just coincidentally, Oakville, much higher than in the Toronto and Oshawa areas. But notwithstanding that, the point is that the same trend exists where housing value is high, wherever it would be, you're going to have more likely to have kids at home and unable to build wealth. That would indicate to me that the next generation is going to have a problem either building wealth, or the word value is going to be redefined, whether value is going to be something we own or whether value is going to be something we have the rights to make payments on, like a generational mortgage, the way they have in Japan. So urban Canada outside of Ontario, and the reason I point this out, kids at home, is because just to show you, to illustrate the point that as valuations go up, more kids at home. As valuations go down, less kids at home. So in areas where you have lower valuations outside of Ontario and central or suburban BC, Coquitlam Beach, Nanaimo, Parksville, BC, as well as Elliott Lake within BC, all have a very small proportion, about half or even less than half of some areas in Ontario and greater BC. So another contributing factor is the household debt, or as I would say, this is a manifestating factor. It shows where we are and why we're here is what we've been talking about. So we have, and you'll see the green arrow on the right. In Canada, our debt levels went up from 95% of gross domestic product to 107%. So if you think of GDP as our overall country revenue, we've had more debt than having income to support that debt. That's a problem. That's not something that's sustainable. So something has to change. Something would need to give on that. If you had a loan and you had income that was going down in relative terms when you adjust for inflation, you are not going to be able to service that loan in the future. So something has to give. Something has to change in the financial situation. Okay. If financial issues are a precursor to separation, as they seem to be quite clearly, the younger adults in their 20s and 30s that are now significantly common law will be the predominant future family mediation client in, let's say, 5 to 10 years. That's an arguable point, but it's something in that range, I feel. Clients will generally be in the age of early 30s to early 40s. At that stage, common law mediations tend to be more uncertain, leading to an added layer of discussion. So in a married couple, there's no question that the matrimonial home is going to be divided equally, unless subject to other unequal division that is provided by case law. Those are more complicated discussions beyond us as mediators, but generally the rule being 50-50 is very simple to work with. Then it's a matter of evaluation and discussing about the other issues relating to that. When you have another layer of discussion as to whether there's even an entitlement to any portion of equalization, that adds another layer to our mediation repertoire. So it's something that we're going to have to be used to. And as I point out later on, it's going to be a routine part of our mediations. So as common law replaces marriage, common law will become the de facto notion of marriage. If so, property claims may normalize. In other words, the financial arrangement between spouses will be commingled to the point or to the degree where a trust claim becomes commonplace. In other words, if we think 10 years ahead and 90% of couples are common law, at some point you can't separate yourself financially. There's going to be some degree of commingling where it will be almost on par with marriage. Now, I admit that I'm hypothesizing. I'm just taking current data and I'm extrapolating forward. Any number of factors can change. No one knows what's going to happen in the future. But based on the stats and where they're going, this is what's likely to happen. This is one of the side effects of what common law will do. The only offset to that, as I talk about in a moment, is, or the next slide, is when legislation catches up to the prominence of common law. So as we normalize common law and trust claims become normalized and we become more comfortable with it because couples feel there's no other option but to commingle financials between each other. Already we can see in many cases the mediations you've already done, you've seen common law couples where there is a trust claim, where they have contributed to the house reno, for example, they're making a claim or a trust claim. So many common law couples already share the finances and contribution towards the living arrangement. And I give the example, as I mentioned, assisting with the cost of a reno. Family mediators, or we will be forced to be well-versed in routinely mediating the additional consideration of whether a spouse is entitled to equalization through a trust claim. Like I say, once that normalizes, it will be a conversation that we're used to having, but there'll be some transitionary period or it's going to be a confusing conversation or a difficult conversation. Regardless of whether a property claim is made, financial obligations in other areas may dictate an indirect property claim. And I deal with this in my mediation practice because I'm specializing in financial issues. Sometimes when there's enough equity, we don't have to have a payment. We can have an interest transfer rather than a payment. So interest in lieu of a payment. So for example, trade as the bottom of the slide, trade an interest in property for a lump sum spousal support settlement. When I first mentioned that, the response by either lawyers or other mediators was the couples don't want to work together. They don't want to be with each other. You can actually sell that interest to an investor. So if you have an interest in a property and that interest is something where they don't want to work together, many do, by the way, the main couples that get the attention of all of us because it's sensational are the couples that are in conflict. But there are couples that will work together going forward. I've worked with some, not all of them have been high conflict, so I've seen myself. But if they don't, you can sell that interest in the property to an investor. In other words, part of your asset, your house, your business, or whatever, would be owned minority interest of someone else. You can get in there, it gets fairly complicated. These are advanced financial issues, but there is a way to deal with it. If there's enough equity, middle income and above, there is a creative solution if they're interested, if they're willing to look at it, and many are. So will legislation catch up to the shift in ideology? Existing family law rules contemplate a protection of a spouse through equalization. So if a married couple were married 30 or 40 years ago, and one spouse, as traditionally occurred, would stay home, that person was very economically disadvantaged, and equalization was necessary and still is necessary to address that for their financial future, for their financial security. Therefore, common law becomes prevalent as it is on the path from toe doing. Societal pressure will build and legislation will likely address the new normal. So in my view, it's not likely a question of if, but when. And it's always in my experience. And if there are lawyers here today, feel free to chime in on it, but it's a matter of when, not if. According to another Ipsos Reid poll, I think this was 2021, my apologies, I did not put the date, but it was recent as well. A larger proportion of Canadians between the ages of 18 to 34 say they consider anxiety, just over 2/3, and depression as mental health challenges, more open to admitting. In that age group, they're more open to admitting they have a problem. And as you see at the bottom, the older demographic is not. The older demographic seems to have either higher or better coping skills. The flip side of being more open to seeking help is that it may result in lowered coping skills. It's how we define trauma. It's the way I explain trauma, the way I see trauma, it's a relative term. If you say something to me and make a criticism, I will respond. If I'm in a poor mental state, that same criticism may affect me traumatically. So that would be trauma. So what's traumatic to one person may not be to another, and it's the same question or same criticism. So that's why I always say trauma is a relative term. So if we have low coping skills, a young person that becomes in their 40s and 50s years from now will have a higher degree of divorce. They'll basically give up on the notion of being in a union, whether it's common law or marriage at the time. If it's someone that's older now, they tend to be more resilient. They grew up in a generation that I would just say respectfully was more resilient than ours and was able to withstand more. So they're able to deal with the stressors of life perhaps a little better than the younger generation at this time. The onus on us as family mediators, another one would be to obviously, to be an obvious point, as well versed in the rules of married versus family law couples. Just because we know it's coming, if the trajectory stays the way it is, it's not a matter of, as I said, if, it's a matter of when. Mediating the conversation around a property trust claim. There are 4 property trust claims, and if you are interested in learning more about it, if you look at some lawyer blogs, Russell Alexander, Collaborative Family Lawyers is one that does an extensive social media outreach. If you are interested, they cover everything from parenting to financial issues. They have a series on trust claims, and there's 4 different types. So they look at that kind of thing as well. So the trust claim issue or the fact that they're common law on the surface decomplicates the financials in the sense that there's not likely to be a property claim. But on the other hand, on the flip side, if there is any assertion of property, before you can even get to the valuation of that property, you have to establish whether there is a claim or merit to that claim, being a trust claim. And as we were talking before, one person mentioned to me in York University in the May webinar about the increase of the prevalence of cohabitation agreements. And I thought that was quite astute, because I think that goes directly in line with what we're talking about. If people are going to venture into common law, they're more likely or wiser to consider a cohabitation agreement. So we'll need to understand what the elements are in a cohabitation agreement so we can mediate them. We're not going to be drafting it, but we're going to be putting in the elements in an MOU versus a general parenting plan or financial plan. So it's a matter of getting up to speed on that. Marianne probably can talk about that better than I can, cohabitation. All right, so that is in a nutshell my presentation. That is my business card. If anyone is interested, happy to help out. Reach out anytime. Happy to answer any questions. Are there any questions?
Let's open it up. There's about 23 of us here, so please feel free to unmute and ask a question of Demitry. Katie.
Hey, Demitry. I unfortunately arrived late, but what I caught was awesome. Thank you so much.
Thank you.
I'm wondering, the piece where you spoke about like adult children being more likely to live at home, I'm wondering what your thoughts are around how that might impact parents' decisions to separate and considerations for that unique sort of situation, please.
Right. I think that's a good question. I think it will just add a layer of pressure to the family situation. So if the husband and wife or the same-sex couple, whether in either case, is having financial pressures, having the kids at home and having to look after them adds another degree of pressure. It just adds more weight on their shoulders. So if anything, if I think about it logically, it would extend or increase the probability, at least, of a separation of that couple. It's another stressor.
Sorry, I have a follow-up question.
Yeah.
Do you think that it might inhibit people from separating? Because I'm wondering if they would, like, I hear what you're saying, that the additional stress might lead people to separate, but practically speaking, do you think that it could hinder people's plans to separate or prevent them from doing so?
You mean because there are kids at home and staying wed for the sake of the children? Is that what you mean?
I think I mean just having more adults who would need to be effectively rehomed potentially.
I'm not sure. I don't think that when they're adult children and they're not able to take care of themselves to the degree that they otherwise could, not to their fault, just because of the precarious economic situation we're in. It's an interesting question, because if I think about it logically, staying together does make more sense. But my experiences and all of our experiences, emotions take over rationality. So if emotions take over, at some point, I think there's more pressure to separate than to stay together. It could be. It's a good question. It's looking at it, the emotion taking it the opposite way. But I think there's more pressure to separate, if anything. And let's say there's a family of four. They're adult children. They're adult children, so they're not necessarily needing to be all the time together. One could move in with one parent, the other could move in with the other, and that would still be a combined family, just slightly fragmented. So as I think it through, I think it would still be on the same probability of separation. But I take your point.
Demitry, can I add that just in my practice that I'm seeing a lot of families, I work in Toronto, a lot of families are deferring the sale of the matrimonial home and living together, especially to house sort of university kids who are almost done. The family makes the decision to separate. They do separate their finances. They go through the separation agreement. They stay housed, living separate and apart in the matrimonial home, and defer the sale so that everyone can finish school. I'm seeing a lot of that. I'm seeing that on kind of a shorter term basis, like maybe 1 year to 2 years max. And I'm also seeing longer durations of families saying, you know, we want to stay together in this house, making an upstairs and downstairs apartment. And I think that's because of the financial pressure, especially in the Toronto area on housing prices. It's almost impossible for them to rehouse themselves around their lives. Oh, here comes somebody joining us. And be able to sort of keep a semblance of their, usual activities. So I'm seeing a lot of that. I don't know if anyone else is, and that's joined us, that's seeing deferred sale of home for
Yeah,
that.
Marianne, I was going to say, sorry, I've had some generational couples living in the same home, and same sort of thing. They've had a very loose separation agreement, but haven't dealt with a lot of the financials because of the complexity of the multifamily, the house, etc.
Yeah.
So I've seen more of that as well.
Yeah. The lawyers are getting used to it. I think like when I first started doing deferred sale, it was like, you can't do that. That's awful. It's a terrible idea. And now with all the financial pressure, it seems like I'm having more clients, having good agreements they can rely on to move forward. Yeah. Any other questions for Demitry? So Demitry and I were talking before you all joined us about the real need for, well, actually, I've identified myself a need. I don't know how to write a cohabitation agreement. And if Stats Canada is right, and we're having a lot of additional people entering into common law unions, they may need services of a cohabitation agreement. And I think that's a real area of identified need for training and interest. I think, for me personally, I find it quite fascinating because it's a whole different approach to, writing a document. You're not resolving issues of the separation. You're making decisions in good times in hopes that bad times don't come. And I'm pretty interested in that. I don't know if anyone else is, or if anyone else has more experience in doing cohabs, because I think we need also to know who you are so that we can refer to people. Because I don't know many. Is anyone doing cohabitation agreements?
I do them for pet ownership, but I don't think that's what you're thinking about.
Really? Okay, hang on. Who's talking? I have to hear this.
It was Katie.
Katie, you do them for pet ownership?
Yeah, yes.
Okay.
So when people get a pet together, in the good times, we plan for how, like what the pet's ownership will look like should they separate going forward.
Okay, cool.
So not actually what you're looking for, but similar vibe.
Interesting, Katie. Interesting.
Yeah, that's super interesting. So do you sort of like limit it to just talking about Fido, for example?
Yes. Yeah. I'm specifically like that piece of my work focuses specifically on pet mediation.
That's so cool. Okay. Yeah, I think people are saying in the chat that they'd be interested in receiving that sort of training. I don't know. Vicky's here with us, the president of OIFM. Vicky, what do you think about training for cohab? Putting you on the spot. I know you're on.
Sorry, yeah, I was on mute there. Yeah, that was putting me on the spot. In terms of the training, I think it would be very helpful. I think information empowers mediators. Not sure whether we should be doing cohabitation agreements. However, I think having knowledge about them and how that might design our mediation process, I think that's all good information to have.
Yeah, I think for sure, definitely I should clarify that I don't mean that we should be drafting them. I think that we should know what the issues are so we can successfully mediate those issues and then send that information to lawyers for formalizing and independent legal advice, to be clear. Yeah, we can't draft them. Yeah, and they're very different. They're very different. I've learned a little bit about them, and they're very different than what I do normally. And I think that it's a really neat distinction. And I just feel like this could be like an area of just like pet mediation, we could specialize somehow. Yeah. Any other questions for Demitry about the stats of our lives? And my daughter's getting married next month, so she's going to add herself from the cohabitation list to the married list. But as Demitry was going through the slides, I was thinking about the pressures and definitely getting together to share rent, for example, are very valid reasons people, kind of bond together, and then some will choose to get married and some will choose not to. But I have one to add to the list of married people. Any final thoughts?
Hi, it's Joanne Stewart. I'm a lawyer. I met you years ago, but I haven't seen you in a long, long time.
Oh, really? I look better now, I think.
I thought this was really interesting. And I just, on the topic of the cohabitation agreements, they're actually, I think for those and for marriage contracts, it's actually really helpful to have a mediator there, but also with the clients having legal advice through the discussion or the negotiation, not necessarily when the mediator is there, like not all together necessarily, but as you go along, because I think these things, they're so far reaching. And a lot of the people who do them tend to be young. And I'm getting older now. I'm quite a bit older in any event. And I think they forget to look ahead. So I see a ton of these things. And my daughter, both my son and daughter just got married last year too. So I'm in the same boat as you were.
Wow.
And I think because they don't know what to think about going forward, but these agreements are supposed to be enforceable going forward. And then things happen and the agreements are not so good a lot of the time. And they become really, really problematic. So in my world, both as a parent and a lawyer and all of these things, and doing mediations too, and it's really important. And I think that mediators with your frame of reference have a lot of, you have a lot of important interest-based things to raise that have legal repercussions, which they don't think about. Did I say that right? Do you know what I mean?
That's beautiful. Yeah.
It's not coming out all that well, but there's all kinds of stuff because that you can say, what about this? What about that? In a more helpful way than lawyers can.
Yeah.
And get their minds going about, what's going to happen in 10 years and 20 years and 30 years. Do you want this thing to die in 5 years? Like, people, they say they'll revisit them, but most people don't because it's kind of yucky. So I think you actually have really a lot to offer. I won't go on about it, but I really do. If you could,
so nice.
it'd be totally cool.
Yeah.
That makes so much sense. Sorry, Sherry here. That makes so much sense because I find even in my mediations, I talk about future things, dealing with a common law couple right now that want to keep a joint venture going. And it's like, hey, what happens when you get in another relationship? What happens when we are hopefully for a lot of the separating couples, the voice of think ahead, that sometimes I say I'm the necessary evil where I make them think of things that, they wouldn't think about.
Yeah.
That's right. That's
Yeah.
right. Yeah. I see Audrey with her hand and then I'll, yeah.
Okay, I'll go on mute.
Hi, I have just a comment. I'm a parent professional, and I found Demitry's presentation was very interesting in that the trend is common law, and that the trend is emphasized because of financial health. I read an article in the Globe and Mail about a week or so ago that spoke about a research project that showed that marital satisfaction or couple satisfaction is actually increased when they pool finances. But because of today's trends, I could see that that would be a less likely choice for couples to make. And I can see how it would not be advantageous for all couples to pool finances, but in terms of creating a we in a couple, that pooling of finances can make both partners feel supported and build trust within the relationship. So as a result, since that is less likely to happen today, I'm wondering if the trend toward common law couples dissolving is also going to increase.
I think when we talk about common law, and the reason that they're common law in the first place, I go back to that. Excuse me. when I go back to common law in the first place, why they got into common law versus married, it was mainly for the issue of property or finance. Sorry, I'm losing my voice. I've been talking a lot today. It's a hard question to answer. I don't really know the answer. I can say that when people pool their resources, of course, they're better off. Building a life together, building a generation, and creating a new generation is always more advantageous than not. It's whether they're able to do it, whether they're able to stay in close quarters physically and financially and otherwise. Many are, even after divorce, but many are not, right? So I've done mediations that are high conflict and there'd be no hope in hell, pardon the expression. But there are others where they do agree. And instead of a payment, they agree to a swap of interest, and they're still financially connected. They are financially connected when they have a 4-year-old son or daughter, and there's child support for 20 years. Anyway, so when we have that conversation, I talk about it, whether you're coming back for an annual review on child support, you're coming back to talk about some other financial related issues. Why not be connected in other ways that help you grow together? You can even have a trust set up where you can have an intermediary managing the trust or managing the financial situation between you. In middle income and above, it's possible to have that and still be feasible. So, it's a difficult question to answer. I'm just taking what I did in this webinar in this presentation, this conveyance of info was take existing info, extrapolate it forward, and base it on that. What happens is very hard to say.
It's where the hearts meet the math, really, probably.
Right.
Yeah,
Right.
yeah. Mark, you have a question for Demitry.
Actually, I don't have a question. I'm very impressed by his information and his knowledge. But kind of piggybacking on the last few conversations, I think through mediation, you gain trust of your clients. And so when they go into their next relationship, they may be reaching out for guidance on a cohabitation or a marriage agreement. And I agree that we can't write it, but we certainly should be able to help them negotiate it themselves and take that, just like a separation agreement, to their lawyers for the final touches. Like, I don't know, I see, especially with cohabitation, things are going to change so drastically in the next 10 or 15 years. As Demitry said, legislation is finally going to catch up, whether it's leave it the same and educate people that, when you're in a cohabitation agreement, you don't, or when you're in a common law relationship, you don't gain equity like you do in a marriage, because I don't think a lot of people really truly understand that. But at the same time, I think that people who do understand that would want to maintain that, so when the legislation changes, they still have the agreement that they're going to be protected in where they've started.
For sure. But I think it comes back to the same question that Audrey asked, although it's a different question. It does come back to the core issue of whether they're willing to stay somehow financially connected beyond just the usual child support, assuming there's children in the marriage, right? So if they're willing to stay connected to some degree, and as I say, we can get very creative and find a way, it's a matter of whether they'll accept it. Some people, as I say, very high conflict, I don't bother because my expertise, my background is in finance as a real estate valuator. I'm very familiar, very comfortable with the numbers, and I will find a way if they're willing to listen. And most people are. Most people like the idea. When a husband is very almost crying because they own 3 or 4 properties and they're going to lose them all, and I can show them where they could build something, let's call it a trust, whether there's a formal trustee or not, and work together, great. You're going to be better off financially. You're not dividing it. You're building wealth together. What's wrong with being business partners that maybe get along enough but aren't friends? You're just business partners now. As long as you're willing to go that far, you'll be better off financially. And frankly, if you don't, you're going to be off much worse. Most of the people that say that to me are in their 40s, 50s, and beyond that have that level of wealth. In this case, this particular client was a plumber. Did very well, had 3 apprentices working with him, always busy, always did well, bought real estate many years ago, a number of multiplex properties, had most of them paid off, income was very, very high. Halving that at some point later in life is not the way to go. And so they actually did set up a trust agreement. They went for it. He wanted it. The wife at first did not. It took a lot of convincing. It took a lot of getting her to realize that getting along and finding a way to work together as business partners, forget being spouses now, as business partners, makes sense for both of you and your children as well. So
You just gave me an idea for a file. I have one that sounds very similar, like 35 properties and some extra properties in the United States. And one partner doesn't want to separate everything. And they thought they reached a deal, but then the wife got, cold feet and worried that, what about her property rights? So a trust agreement, I'm going to have to talk to you more about that because that's something I haven't done, I haven't thought of. So interesting. Great that we can share our ideas and really the point of the mediation matters is for us all to come together and kind of brainstorm and think about all the things that we do alone in our offices and share those ideas together. So I thank you so much for spending this hour with us, and very special thanks to Demitry for sharing again with OFM, doing his, is it your second or third now?
I think third, I believe.
Third webinar. Yeah.